JJ the CPA here. Hope you're doing well. So a few tips for partnerships. This is those that are filing Form 1065. They get a K-1 from that. Here's the biggest thing is that if the partnership is paying wages to any partners, it's got to stop. They're not allowed by the IRS. Where does it say that? Go find it. It's everywhere. It's not allowed. The other thing is that if you're actively involved in the partnership, as in from the sweat of your brow, you are in it, you got your fingers in it, and you're sifting through that business, then your net income on page 1 that goes to box 1 is probably going to be, if the IRS were to review it, something that's subject to self-employment taxes and needs to be reported in box 14. This is this, but if you're active, it's subject to it, okay? With that being said, what you want to look at is, does it make sense for your business to be a partnership if you're actively involved? Because with an S corporation, you can pay wages to yourself. And with an S corporation, you are in a position where the net income is not subject to self-employment taxes. Now, a few other tips for partnerships is that if you are deducting guaranteed payments, know that that partner receiving the guaranteed payments is paying that additional 15.3% in taxes down at the individual level. It's self-employment taxes. What is a guaranteed payment? Well, first and foremost, it would be documented in the operating or partnership agreement, and it's a guaranteed dollar amount being paid out to that partnership. Typically, it's not going to be a percentage based on something because that's not guaranteed. So I'm not necessarily advocating at all that you get around or skirt paying out guaranteed payments because it's subject to the self-employment tax. What I'm saying is make sure that you're looking at it properly. So even though it's a deduction to the partnership, there is that double whammy. Well, it's taxable to the partner and subject to that tax. Lastly, if the partnership is paying for the health insurance for the more than 2% partner, that does need to be picked up as a guaranteed payment. And it is subject to self-employment tax as well as income tax down at the partner level. But here's what's key. That amount that's picked up for that health insurance is a deduction to that partner down at the individual level on Schedule 1 on the line item that says self-employed health insurance. So be sure that you're matching that up and deducting it. Now, if you get a Schedule K-1, especially for fellow tax pros, for a partner and you didn't prepare the partnership, so you see the K-1 that has guaranteed payments on it, well, you might inquire if it's not otherwise noted, did that guaranteed payment include any health insurance so that you or your client can get that deduction. Hey, I've got a playlist for tax season and tax tips, as well as LLC and S Corp and partnership issues that I'm going to give you a link in the body of this video. If you made it to here, I'd love it if you'd subscribe. Hopefully I'm bringing value to you. I'm a CPA. I got 30 years of experience, still in the trenches. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.
Interaction of the ERTC, what the IRS indicated was that you can take advantage of both, just not on the same payroll as she indicated. The SBA has said the exact same thing, which you find on the Form 3508, any three versions that it says the same thing.